Planning for the future, it can feel like a lot, right? Especially when you start thinking about the potential costs of getting older. Today, we're going to break down a strategy that actually combines lifetime protection with a way to help pay for long term care. The goal here is to give you a clearer path forward. So let's get right into it. All right, so let's just start with a really direct question. And it's one that, honestly, we all need to ask ourselves. When it comes to your own financial plan, your own health plan for the long haul, what is it? What's your plan? And look, it can be a tough one to think about, but facing it now is absolutely key to being prepared. And here's exactly why that question is so urgent. Get this, if you're turning 65 today, you have almost a 70% chance of needing some kind of long term care down the road. 70%. I mean, that's not a small number. It's a probability we've really got to take seriously. Okay, so what about the cost? Well, hold on to your hats for this one. The average price for just a private room in a nursing home is over $92,000 a year. That is a huge number that could just wipe out a lifetime of savings in a flash. The financial scale of this challenge is, well, it's massive. So, this all brings us to the heart of the issue we're tackling today, the long-term care challenge. It's a really significant and growing need, especially as people are living longer. And it's something that absolutely requires a dedicated strategy. And a picture like this really gets to the heart of it, doesn't it? The whole point of all this planning isn't just about the numbers. It's not just about money in a bank account. It's about having the resources you need to maintain your quality of life, your independence. Proactive planning is what makes this picture a reality. Okay, so we've kind of laid out the problem, right? Now let's start talking about a solution. And we're going to start with the foundation, a specific financial tool called whole life insurance. So what exactly is it? Well, to put it simply, whole life insurance is a type of permanent life insurance. It's designed to last your entire life, and it's built on a foundation of some really powerful guarantees. Let's actually break down what those guarantees mean for you. And this is where it gets really powerful. These are the core promises. First up, your premium, it's locked in. It is never, ever going to increase. Second, the death benefit, also guaranteed. And third, the policy builds something called cash value, and that is contractually guaranteed to grow every single year. These guarantees create predictability in a pretty unpredictable world. But here's the thing, a whole life policy isn't something that just sits there. It's a dynamic asset that's actually designed to grow over time, and it becomes more valuable the longer you have it. So it's way more than just protection. It's a tool for building value. And it gets even better. There's another layer to this growth, and that's dividends. If you're a policyholder with a mutual company, you can actually share in the company's financial success. Now, these dividends aren't guaranteed, but they can be a real game changer because you can use them to buy more insurance, which can really accelerate the growth of both your cash value and your death benefit. Okay, so this chart really shows you what that looks like in real life. So check this out. At year 10, you've paid in about $89,000, and you've got over $76,000 in cash value. But here's where the magic happens. By year 15, the cash value has actually grown to be more than the total amount you've paid in premiums. And from that point forward, your policy's value is growing beyond what you've even put into it. Okay, so let's bring this all back to where we started, that big long-term care challenge. We've got this strong financial foundation with whole life insurance. So how do we actually use it to tackle the cost of long-term care? The answer is something called a rider. So how does this actually work? It's pretty straightforward, really. Step one, you add what's called a long-term care or LTC rider to your policy. Then, if you need care because of a chronic illness or a cognitive impairment, you qualify for benefits. And this is the crucial part. Step three, you can then accelerate or tap into a portion of your own death benefit while you're still living to help pay for that care. All right, let's put some real numbers to this to see how it plays out. So let's say you have a $1 million policy. With the rider, you could set aside up to 95% of that. So $950,000 as your pool for long-term care benefits. If you needed care and received, say, $228,000 in benefits over a year, that amount is just deducted from your pool. The bottom line? You still have over $700,000 left for future care, plus a pretty significant death benefit still in place for your family. And this right here, this is a feature that makes a huge difference when you're going through a stressful time. This kind of rider provides what's called an indemnity-style benefit. What that means is you don't have to save and submit every single little receipt every month. Once you qualify, you get the benefit payment. It lets you focus on your care, not on a mountain of paperwork. So when you pull all these pieces together, you've got the guarantees of whole life, the potential growth from dividends, and then that really targeted protection from the LTC rider, what you get is a really comprehensive strategy. What you get is a plan that's designed for genuine peace of mind. At the end of the day, a promise is only as strong as the company standing behind it. This quote really drives home why financial stability is so important. When you see a company that's been around for over 160 years, through all that history, all those market meltdowns, that gives you a certain level of confidence, right? And that's essential when you're planning for decades into the future. So here we are, back where we started. But now you've got a lot more information to work with. This strategy, it offers a way to prepare for a future that we all know is unpredictable. It's about creating guarantees and options for yourself. So the question isn't just what's your plan anymore. The real question is your plan ready for whatever comes next?